6. Segregated fund contract. Only a licensed life agent can work with the investor to prepare and submit the application for a segregated fund. The application is one step along the path to ownership of the investment. It is preceded by the recommendation of the agent in the reason why letter and followed by the financial contribution to the contract. The finalized contract is evidence of the agreement between insurer and investor and obligates both parties to the terms of the investment. 6.1 Contracts. Contracts are legal documents that bind their parties to specified terms and conditions. Many forms of contract exist. The contract between an insurer and an investor for a segregated fund is an individual variable insurance contract, IVIC. 6.1.1 Individual variable insurance contract, IVIC. The IVIC spells out the conditions for buying, terminating, withdrawing and receiving the benefits from the segregated fund investment. It is a document of disclosure intended to both reveal what the investor is buying and reinforce the risk associated with the investment. The insurer makes these contractual commitments to the investor. Black small square guarantees and benefits. Black small square method to determine the value of benefits related to the market value of the fund and their surrender value. Black small square percentage of premium allocated to provide the benefits related to the market value of the fund. Black small square when the value of the fund and benefits are determined. Black small square fees and charges, or how fees and charges are calculated. Black small square right to make changes to the contract. The contract states what information forms part of the contract. It includes black small square identification of the IVIC and the segregated fund, black small square management expense ratio, MER, black small square risk disclosure, black small square fees and expenses, black small square right to cancel, black small square statement of the accuracy of the fund facts information and the remedy for any error in the information provided by that document. Finally, the contract states: black small square the contract may be rescinded in writing to the insurance company, at the address it has specified, within 2 business days after the contract owner receives confirmation of the purchase. Black small square if the contract is rescinded, the contract owner receives the lesser of the amount invested or the value of the fund on the valuation day following the day the insurer received the request for rescission. Fees or charges are also refunded. Black small square the contract owner is deemed to receive a confirmation 5 business days after it has been mailed by the insurer. All segregated fund contracts are required to provide this information. Thus, the investor is equally protected in his contractual rights regarding these details regardless of which insurer he chooses to invest with. A contract may be attached to the application form or may be provided to the investor after the insurer receives the application. Delivery of a sample contract does not constitute purchase of the segregated fund. Purchase is confirmed by the effective date of the contract. The effective date is the valuation date following the receipt of the first deposit and when all contract criteria have been satisfied. The contract is assigned a unique reference number. This number is used whenever instructions or information about the contract is conveyed between contract owner and insurer. 6.2 Investor requirements. The investor must provide the information needed for the contract to be prepared by assisting the agent in filling out the application. He must be accurate and truthful. He should also aim to make the decisions that will create the contract most suitable to his needs and objectives. Those decisions may be based on the life insurance agent's recommendations, or the investor may arrive at them independently. The agent proceeds on the basis that the investor understands the decision he is making and can appreciate its consequences. If the agent is unsure of the client's ability to understand a part or all of the contract, the agent should seek advice from his direct supervisor before proceeding. The second requirement that must be met by the investor is to fund the account. 6.2.1 Application Form. The application form is completed by the investor and the agent together. This may be together virtually. The investor, who is the applicant, provides the necessary information. The agent records the information on the form itself in its electronic or paper format. Segregated Funds and Annuities Chapter 6, Segregated Fund Contract 190. Many details are collected. An application form is multiple pages in length. It requires enough time to complete so that information is recorded correctly and nothing is overlooked. The agent may need to explain certain aspects of the form so the investor fully understands his options and his commitment. A circumstance could arise that prevents the investor from fully comprehending the application, certain aspects of the application or the agent's explanations. For instance, if the investor does not speak a language the agent understands, then the application should not be completed until steps are taken so that understanding exists. The agent may need to provide more information to the investor or provide a translator. The investor must review all information on the form and correct any inaccuracies. Then, the investor and annuitant, if they are not the same person, both sign and date the application, electronically if need be. Their signatures confirm their agreement with the information. The agent must also provide specific information for the application to be processed. An exception is made to the requirement for the contract owner to sign the application when the contract owner is represented by a power of attorney, POA, for property. An agent may find a POA appointed for a client who is ill, mentally incapable or absent from the country for a prolonged period of time. The individual with the POA can complete and sign the application on behalf of the contract owner. However, he may not have rights to name the beneficiary. A legal opinion should be sought in this circumstance. Information must be recorded by the agent carefully since it will become the basis for the contract. The agent must also ensure that all information needed is gathered since an incomplete application will be rejected by the insurer. At the time the application is made, the reason why letter is prepared. The reason why letter is one of the pillars of insurance's sales suitability. It proves that the agent has addressed a relevant insurance need or needs by making recommendations to a client, together with the basis for the recommendations, and whether or not the client has accepted or refused those recommendations. The reason why letter. Black small square confirms facts. Black small square verifies the instructions received from the client. Black small square identifies the client's needs that the product meets and the needs that will be left uninsured. Black small square documents that the sale is suitable. Black small square substantiates the client's understanding of his purchase. The reason why letter is not optional. The agent must prepare the letter and review it with the client, and both must keep a copy. 6.2.1.1 Registered or non-registered form. The segregated fund account can be non-registered or registered. Registered accounts are further categorized as locked-in or non-locked-in. There may be age restrictions when certain types of locked-in accounts can be established, however, there are no age restrictions for opening a non-registered account. The account in which the IVIC investment is made must be accurately selected. For example, an investor who believes he will be enjoying the tax deferral of a registered account may be financially disadvantaged if the account is set up in a non-registered form. To open a registered account, the contract owner needs to provide his social insurance number, SIN, for tax purposes. A registered contract requires the owner to be the same person as the annuitant. Ownership of the contract cannot be transferred and the contract cannot be used as collateral. A non-registered account, that is, an account not registered for tax purposes, may specify an annuitant who is not the contract owner. The owner may be an individual, a group of individuals, or a corporation. The contract may be purchased until the date on which the annuitant turns 90. A non-registered account has the following benefits. Black small square ownership can be transferred according to the rules of the insurer that has issued the contract. Black small square it can be used as collateral for securing a loan by assigning the contract to the lender. 6.2.1.2 Naming annuitant and beneficiary. The owner of the contract enjoys the rights of ownership, such as the ability to assign the contract. He names the annuitant and beneficiary to the contract. As explained in previous chapters, the annuitant is the person on whose life the guarantees are based and whose death triggers payment of the death benefit. Once named, the annuitant may not be changed. However, in a non-registered contract, prior to the death of the initial annuitant, a joint annuitant may be named to replace him if he dies. The contract continues until the death of the last surviving annuitant, and the death benefit is only paid out at this time. The beneficiary receives the benefit of the contract after the death of the last surviving annuitant. More than one beneficiary can be named. If this occurs, a percentage of death benefit must be allotted to each beneficiary. When a spousal RRSP is set up, the owner and annuitant of the contract is the person who benefits from the deposits to the contract. The person who made the deposits to the plan does not have ownership rights. The recipient of the deposits names the beneficiary. After a contract owner has died, the insurer may release information about a contract to the beneficiary and to the owner's estate. 6.2.1.3 Rider Election Form. The rider election is provided only to those contract owners investing in Guaranteed Minimum Withdrawal Benefits, GMWB. It. Black small square specifies that the GMWB is being elected. Black small square provides a payment option, lifetime or to an end date. Black small square offers space to fill in the correct fund codes, must be those that offer the rider. Black small square describes minimum initial deposit requirements. Black small square gives a choice for payments. Black small square instructs on the frequency of payments and how they are made. Black small square establishes mandatory authorization by the owner and the agent. Just as the segregated fund contract addresses investment risk from the outset, so too does the rider address the impact of excess withdrawals from a GMWB because they can significantly reduce the value of the contract. The contract owner may not receive his expected amount in payments in the future if excess withdrawals have been made. 6.2.1.4 Client Identification Requirements. FINTRAC was established by, and operates within the scope of, the Proceeds of Crime, Money Laundering, and Terrorist Financing Act, PCMLTFA, 33 and its regulations. The Financial Transactions and Reports Analysis Centre of Canada, FINTRAC, is Canada's financial intelligence unit, FIU. The centre assists in the detection, prevention, and deterrence of money laundering and the financing of terrorist activities. As discussed earlier, the agent has obligations under the PCMLTFA to properly identify clients and to keep records about the client and the transaction if the client is expected to deposit $10,000 or more to the contract over its lifetime or if a beneficiary will receive $10,000 or more over the duration of an annuity or policy. The agent must also determine whether the client is acting on instructions from a third party. The agent is also required to submit a terrorist property report under specified circumstances to FINTRAC. These requirements do not apply when the account is registered. Requirements are also specified for the agent if a large cash transaction is made as cash or a virtual currency, VC. A large cash transaction is a single cash deposit of $10,000 or more, or multiple cash deposits equaling $10,000 or more made in a 24-hour period. Note the specification for cash. Cash means cash, notes and coins, not checks, not transfers, not a bank draft or other instrument. When an account is opened, reviewed, or a suspicious fact is detected, the agent has to confirm whether the client is a politically exposed foreign person, PEFP, a domestic politically exposed person, PEP, head of an international organization, HIO, or a family member or close associate of one of these people. In general, a PEFP is a person who has held a government or judicial position in a foreign country. A domestic PEP is a person who holds, or has held within the last 5 years, a specific office or position in or on behalf of the Canadian federal government, a Canadian provincial government, or a Canadian municipal government. An HIO is the head or chief executive officer of an international organization set up by the governments of more than one country. If the client is identified as being high risk, you have specific obligations for the client, his family members, and close associates that apply to record keeping, establishing the source of funds, and obtaining the approval of senior management to keep the account owner. FINTRAC has 3 methods to establish suitable client identification. Black small square photo identification applies to individuals who are physically present. White small square must be issued by a federal, provincial, or territorial government. White small square name and photograph details must match. White small square must be valid, current, and authentic. White small square must include a unique identifying number. White small square a foreign issued ID is acceptable if it is equivalent to the Canadian issued photo ID documents. White small square some examples include a Canadian passport, permanent resident card, secure certificate of Indian status, provincial or territorial identity cards, a U.S. passport. Black small square a credit file. White small square the file must have existed for at least 3 years. White small square the name, address, and date of birth must match the information provided by the individual. White small square providers include Equifax Canada and TransUnion Canada. Black small square dual process. White small square 2 original, valid and current documents or information from independent and reliable sources must be provided. White small square name, address, and date of birth must match. White small square documents must be valid and current. White small square 2 sources are used as follows. One source to verify an individual's name and address, such as a Canadian passport, and a second source to verify their name and date of birth, such as a birth certificate or permanent resident card. One source to verify an individual's name and address and a second source to verify their name and confirm a financial account, such as a credit card statement. One source to verify an individual's name and date of birth and a second source to verify their name and confirm a financial account. Ontario, Manitoba, Nova Scotia, and Prince Edward Island prohibit the use of their provincial health cards for identification. Corporations and other entities must also supply acceptable identification, such as the corporation's certificate of corporate status and the names of directors. The agent must be completely confident that the person appearing in the identification papers is the same person making the application. If there is any suspicion that the applicant is acting for a third party, then a form for third-party determination must be completed. Any suspicious transaction or attempted transaction may be of interest to FINTRAC. Suspicious transactions are a combination of facts, context, and money laundering indicators. Black small square facts are actual events, actions, occurrences, or elements that exist or are known to have happened. Black small square context is provided through general awareness of events in the client's business or community, knowledge of typical financial activities, regular know your client activities, information based on risk assessments and the background and/or behavior of a client. Black small square indicators are potential red flags that could initiate suspicion or indicate that something may be unusual without a reasonable explanation. Suspicion itself has 3 thresholds. The lowest is simple suspicion, in which a hunch or gut feeling leads an agent to believe that money laundering or terrorist financing is happening. Next is when there are reasonable grounds to suspect that there is a probability of money laundering or terrorist financing. The highest threshold is when there are reasonable grounds to believe and support the probability that money laundering or terrorist financing is occurring. An attempted or completed suspicious transaction must be reported to FINTRAC. The agent may wish to first bring the situation to the attention of a supervisor or manager. All members of the financial services industry have a responsibility to follow the FINTRAC guidelines in an effort to curtail, with a goal of eliminating, money laundering and terrorist financing. Segregated Funds and Annuities Chapter 6, Segregated Fund Contract 195. 6.2.2 Funding the account. A deposit must accompany the application. It can be in the form of a check made payable to the insurer for a lump sum, by transfer, or by providing the date on which the first pre-authorized deposit will be made. Pre-authorized deposits or debits, PADs, specify frequency, weekly, bi-weekly, monthly, bi-monthly, quarterly, semi-annually or annually, the date of the first withdrawal from the account and the regular subsequent date for withdrawals. Banking information for the institution from which withdrawals will be made and a personalized void check or stamped confirmation from the bank must be provided. The deposit is allocated to the selected fund or funds. If more than one fund is chosen, the contract owner also indicates either the dollar amount of or percentage of deposit he wants applied against each fund. In some jurisdictions, when locked-in funds are being transferred, the spouse must give consent to the purchase of the investment. The spouse has the option to release his rights to the pension contributions and subsequent account to which those contributions are deposited by providing a written waiver form. An RRSP, Locked-in Retirement Account, LIRA, also called an LRSP or Locked-in Retirement Savings Plan, contract can accept deposits until the end of the calendar year in which the contract owner turns 71. To continue tax deferral, the RRSP can be converted to a Registered Retirement Income Fund, RRIF, and the LIRA/LRSP converted to a Life Income Fund, LIF, or Life Retirement Income Fund, LRIF, or Prescribed Registered Retirement Income Fund, PRRIF, for Saskatchewan and Manitoba pension plan members. If an account must be transferred from one form to another due to attained age, the insurer handles the change. The contract owner is set up in the proper account with the same fund and same unit value as prior to the switch. There may be a minimum value required to open an account, and for different forms of account, these should be verified with the insurer. The investor is informed of the unit value for each deposit. This is true of single deposits and deposits made over time in a PAD plan. The unit value of the fund forms a benchmark against which the future performance is monitored. 6.3 Agent Requirements. The agent is required to meet expectations of the client and the insurer he represents for pre-sale activities, completion of the application, delivery of documents and post-sale service. 6.3.1 Meeting carrier expectations. The agent is expected to meet all expectations of the carrier for volume of business, client contact, accuracy in dealing with the carrier and clients, and necessary record keeping. 6.3.2 Document delivery. The contract must be delivered to the investor in person or through registered mail for the purchase to be completed and the contract issued. It includes other specified documents like the information folder, fund facts, and contract confirmation. If a delivery receipt is part of the package of documents, it must be completed, signed, and witnessed before it is returned to the issuing insurer. Other forms may be required during the period the contract is in force if the client's situation changes or evolves, such as the change of beneficiary form and that used for a death claim. 6.3.2.1 Information folder. The information folder describes all the features of segregated funds and how they work. Specific fund details are provided in fund facts, which usually accompany the information folder. The purpose of the information folder is to provide brief and plain disclosure of all material facts relating to the IBICs issued by the insurer. One information folder is typically issued by the insurer for all the funds it provides, although every fund has a unique identifier code. This is helpful to the agent since it means all relevant information is put into the hands of the investor at the same time. There can be no omissions. An information folder may lead off with a summary of key facts, which is simply an overview of details provided again in the information folder itself. 6.3.2.2 Fund Facts. Fund facts are the details of the particular funds offered by the insurer through its information folder. One is prepared for each fund as of December 31st of the preceding year. The information is presented consistently for every fund so that comparisons can be easily made between funds. It is essential for the agent to review the fund facts for the funds he has recommended with the investor to ensure the investor understands the recommendation and to answer any questions. Here is a sample fund facts document, 34. (6.3.2.3) Confirmation is required to black small square finalize purchase, black small square switch funds, black small square reset, black small square withdraw money from the contract, black small square terminate the contract. Confirmation may be provided to the investor electronically or in writing. On occasion, the client may be given the opportunity to provide instructions to the insurer verbally. These instructions are as binding as if they were written. 6.3.3 Ongoing service requirements. Sales activity for a segregated fund contract does not end with the confirmation of purchase. The wise agent recognizes the confirmation as just one step along the path of providing exemplary customer service. 6.3.3.1 Post-sale follow-up. The agent should follow up with the client once the sales process is completed to see whether he is satisfied with the product and to answer any questions that may have arisen. Keeping the lines of communication open between client and agent reinforces the agent's value to the client and can help to pave the way for additional business or recommendations. 6.3.3.2 Need to monitor client. The agent needs to inform the client that he must notify the agent or insurer of changes to his personal situation that might affect the contract in place. Such a change may be the need to change the beneficiary. The agent should also periodically check that all information, such as the client's address of residence, is up to date. It would also be important to know if financial affairs of a client have transferred over to a power of attorney, POA, in which case the client could no longer provide directions for the contract. 6.3.3.3 Need to monitor product. New segregated funds are introduced continually, others are combined and discontinued. Agents need to know their products well and keep on top of changes, such as a change in portfolio manager or the management expense ratio, MER, that may have a direct bearing on performance. Significant changes to a fund should be communicated to the client immediately, and this is usually done by the insurer rather than the agent. However, the agent may wish to reinforce the impact, or lack of impact, of any changes on the client. If there is a substantial loss in value of a fund, the client must be informed. Although no one likes bad news, providing the information shows that the agent is monitoring the fund and can answer questions and concerns that may arise as a consequence. 6.3.3.4 Annual Review. At a minimum, the agent should meet in person or virtually with the client once a year to review the selected investment and its performance. The agent should be prepared to discuss the return since the last review, whether good or bad, expectations, and his understanding for the reasons underlying performance. He should use this opportunity to check with the client as to whether there are changes in his personal situation of which the agent should be aware. This is also a time to ensure the investor is aware of any significant changes that have occurred in the fund if applicable. 6.3.3.5 Handling deposits. When a check accompanies the application, it must be handled securely and immediately sent to the insurer. There is no room for error in the handling of money and any other banking information. The check should show the contract number to which the payment is to be applied. 6.3.3.6 Making a fund switch. A fund switch is a change in investment from one fund to another. Fund switches may be scheduled or unscheduled. An unscheduled switch is simply made by request to the agent or insurer. The switch may be requested because the investor wishes to rebalance the account or is dissatisfied with fund performance, for instance. The request can happen at any time. A minimum amount is required for the switch and the minimum balance for the fund must be met. Each insurer provides a number of switches a year for free. A withdrawal fee may be charged when switches exceed this limit. Some switches will not be allowed depending on the sales charge or contract guarantees. It is also possible for a switch to act as a reset that changes both the maturity date of the contract and contract guarantees. Segregated Funds and Annuities Chapter 6, Segregated Fund Contract 204. If units are switched within 90 days of purchase, a short-term trading fee may be charged or the switch may not be permitted. A short-term trading fee is a charge against the value of the fund, e.g. 2%. The information about the amount of the fee is in Fund Facts. A scheduled switch is one set up on a regular basis. It is usually made monthly or quarterly. There is no need for the client to make the switch request in this case. Fees are not charged when switches are scheduled. However, the insurer can cancel the switches or redirect switched funds. If this occurs, the investor will be notified in advance and provided with options for the future. A capital gain or loss can be incurred by a switch to the extent the amount switched exceeds or is lower than the adjusted cost base of the units. 6.3.3.7 Resets. Similar to switches, a reset to a higher account value based on market value can be scheduled or unscheduled. However, unlike switches, not all funds allow reset to occur. When a reset is completed, the maturity date of the contract resets. For 10-year contracts, the new maturity date will be 10 years from the reset date. Some insurers limit the age of the investor, or annuitant, at which a reset can be made, for instance to age 80. An unscheduled reset is used by an investor to lock in a gain when he sees the value of his units have increased. The contract owner informs the agent or insurer of his wish to reset the contract and the request is processed. The number of resets per year may be limited by the insurer. Therefore, an investor could miss a market high if he has expended his allotment of resets for that year. However, attempting to time the market is rarely successful, far better to try and achieve steady modest gains in reset. A scheduled, or automatic, reset may be restricted to the schedule set by the insurer, such as twice per year. No instructions from the contract owner are required. The reset is done only if the market value of the investment is higher than the unit's deposit value. 6.3.3.8 Change of beneficiary. Although the beneficiary is specified in the application, the need may arise to change the beneficiary if, for instance, the beneficiary dies or the contract owner decides a new beneficiary is in order. This can be done at any time by the contract owner providing the beneficiary designation is not irrevocable. A revocable beneficiary can be changed by the contract owner at any time in a written request to the insurer or by completing a change of beneficiary form. An irrevocable beneficiary can also be changed if the beneficiary consents. When the beneficiary is changed, the insurer must be notified in writing. The change will be effective the date of signing. 6.3.3.9 Renewing a contract. At the 10-year maturity of the contract, its value may be taken as cash or in the form of an annuity, or renewed for another period. When renewed, a new guarantee period begins. The new maturity date depends on the age of the annuitant when the contract is renewed. The initial contribution to the renewal contract is the total market value or the guarantee if the market value is lower. The death benefit guarantee continues. The agent will be involved in recommending the renewal and ensuring proper documentation is prepared and delivered to the insurer in a timely manner. 6.4 Claims. The claim for value of a contract can be made, black small square, by the contract owner for withdrawal, surrender and maturity, black small square, by a beneficiary or an estate trustee, or equivalent, at death, black small square, by the person in control of the contract, when a POA for property is invoked, for withdrawal, surrender and maturity. The claim sees the value of the contract or specified sum, if a withdrawal, paid minus any outstanding charges or fees. The agent should not attempt to calculate the amount that will be paid since he may be unaware of enhancements to or charges against the contract. 6.4.1 Claims process. The process for claims does not have to involve the agent since forms can be ordered directly from the insurer. However, the agent may choose to be involved to provide customer service to his client. 6.4.1.1 Claim forms. Both withdrawal and death benefit claim forms can be ordered directly from the insurer. They must be returned completed and signed with any attachments and information the insurer specifies. Once forms are submitted, an insurance representative specializing in claims takes over handling the claim and issuing a check or checks, or ensuring funds are transferred as requested. 6.4.2 Types of claims. Both tact and sensitivity are called for when the agent is involved in a death claim. Other types of claims are simply financial transactions that call for efficiency and privacy. A high degree of professionalism is expected from the agent who chooses to be involved in claims. Different types of claims are discussed in the following sections. 6.4.2.1 Maturity claims and death claims. The maturity guarantee is claimed when the contract has matured, by the contract owner or person acting as POA for property. The death benefit guarantee is paid at death of the annuitant to the beneficiary. Both guarantee amounts are contractually obligated as a percentage of deposits, adjusted upwards by any resets and adjusted downwards by any withdrawals from the contract. If the market value of the account is not equivalent to the guarantee, the insurer will step in and contribute a sum equal to the difference between market value and guarantee. The declaration of death is made by the beneficiary or estate trustee, who may be an executor, administrator, or liquidator, in Quebec. The contract number is provided in addition to the signature of the claimant and the agent's name and number. Proof of death or the attending physician's statement, APS, is required. The death claim must be accompanied by an original death certificate. Additional documents may be required, especially if the death occurs outside the country. 6.4.2.2 Termination and surrender claims. Termination occurs at contract maturity, surrender occurs before the contract has matured. Both activities constitute a claim and terminate the contract. A contract may be terminated at any time by completing the withdrawal form providing the contract has not matured and annuity payments have not started. The contract owner at termination may choose to receive the value of the contract in cash, to buy an annuity, or another option provided by the insurer. Locked-in accounts may be restricted as to whether the cash can be received, and their value may have to be transferred to another locked-in account depending on the legislation of the province that applies to the funds. 6.4.2.3 Withdrawal form. The request for a withdrawal is initiated by the contract owner. The withdrawal form is used to both close the contract by withdrawing the total value of the account, and to make a partial withdrawal. As discussed in the preceding chapter, charges may apply and the client must specify if the amount he wishes is net of charges, i.e. the actual sum he will receive, or the gross amount. The form requires black small square contract owner information, black small square identification of contract type, black small square selection of withdrawal options, black small square selection of form of payment, i.e. check, direct deposit, or transfer to another product or institution, black small square instructions to set up a scheduled withdrawal plan, SWP, for instance when payments from a RRIF must begin, black small square selection of fund, by its number, from which the withdrawal is to be made, black small square specified amount to be withdrawn, black small square signature of contract owner and irrevocable beneficiary if one exists, black small square signature of agent with a date and time for client instructions. Withdrawal options cover many circumstances beyond a partial or full withdrawal. The contract owner can also choose to black small square set up or change a scheduled payment plan, black small square change the amount or date of scheduled payments, black small square change the allocation of scheduled payments, black small square change the banking information for scheduled payments, black small square stop the scheduled payments. A minimum amount of annual withdrawal is required when the contract is a RRIF. When the contract is a LIF or a Restricted Life Income Fund, RLIF, it must be more than the annual minimum and less than the annual maximum. 6.4.2.4 Power of Attorney, POA, claim a power of attorney, POA, for property document appoints another person to act as a substitute decision maker for all matters pertaining to the contract owner's property when the contract owner is unable to do so. As previously discussed, the individual granted POA for property controls the contract except, possibly, for the naming of beneficiaries. The instructions for withdrawals or surrender made by the person with POA for property must be respected and acted upon, as if he was the contract owner. If the agent has reasons to suspect the person with POA is not acting in the best interests of the contract owner, he should discuss this with his manager or supervisor. 6.4.3 Factors affecting claims. The amount received in a claim may not be the amount anticipated by the contract owner. He must fully understand the effect of withdrawals, sales charges, guarantees and allocations. 6.4.3.1 Maturity and Death Benefit Guarantee. The amount received at maturity or death can exceed the guaranteed amount when the market value of the contract is higher than the guarantee. However, if withdrawals are made from the contract, guarantees are adjusted downwards in proportion to the account balance. The timing of the maturity guarantee can also be affected when reset is used. 6.4.3.2 Allocations. When a segregated fund generates interest, dividends, capital gains, or other sorts of income, that income remains in the fund and is reflected in its unit value. This investment income and these capital gains or losses are allocated to investors annually. This allocation increases or decreases the adjusted cost base, ACB, of a non-registered investment. Consequently, this income is not taxed again upon withdrawal. Chapter 7 Annuity Contracts. Competency components. Black small square implement a recommendation adapted to the client's needs and situation. Black small square provide customer service during the validity period of the coverage. Competency subcomponents. Black small square confirm the requirements that must be met to implement the recommendation. Black small square validate the appropriateness of contract amendment, renewal, and termination applications in regards to the client's situation. Black small square inform the claimant of the claims process. Segregated Funds and Annuities. Chapter 7, Annuity Contracts. 210.